Okay, it's Monday, February 9th. And for once, we had some good price action on a Monday. It was pretty good. And
Yeah.
something new showed up on the charts. There's something that says AGR, so I'm sure you'll go into what that is. So anybody who doesn't recognize that will understand what the comments were about that this morning. So let's get into it.
Yeah. It was a good day. It was actually a great day. I loved it. It was fantastic. Only disappointment was maybe that the ES. We can start there. I'll just blow this one up. And so the only real disappointment was that the ES didn't make it closer to our has to holds, but it did get. I'll just kind of break it into segments here. There we go. So let's find our 920 bar. So here we go, 920. So right at 920, as we had sort of started here in the room, we had already had two scenarios that were in the pre-market that had played out. So we had scenario one back here, kind of finished around 8:15 or so. And then the first target of scenario two, it was only just a matter of like, what, 51.5, call it maybe like a point and a half in spread between the two. So that's something new we started also for the room, just for everyone to help kind of understand, like, when is a scenario dead? So we've started to highlight. I've always just done the highlights just to connect the dots for people, quite literally. Like, that is one scenario. This is one scenario. So when the scenario dies, basically means that it goes to either target one or two, and then it goes the opposite direction far enough in order to kill it. Well, we started highlighting them red. So it's to say that we had it called out. We knew that there was a target there, and that, the market simply reversed, and it did all that it was planning to do, clearly, because now it's died and so forth. So yeah, so we started off here just pointing that kind of stuff out already. So no morning pre-market trades necessarily for the room, but it was pretty obvious that we had a has to hold down below us. I think we had two. Yeah, here they are. So we had two has to holds below us on the ES. And we'll see how that correlates with the NQ here later. But the first one was an interesting one. It was down here around 920 half. And it was also going to be a pretty significant decision point to the downside if we broke this. So we didn't have to worry about it so much because obviously it held, but we did come up short on it by about 4 points. But here again, we have the core with the expected low right here around 24. So as per usual, the core does actually play a pretty big role when you're talking about, where to help gauge risk and reward, and where to maybe just take a little bit more heat inside the trade or something to that effect. But either way, it held the has to hold is the point. And then, yes, the AGR. So I was pointing this out for the people in the room that says, like, look, if you missed this run, because maybe you had, which I know we had like maybe 2 or 3 folks who chimed in, and they had mentioned that they had trades kind of sitting. I did as well. I staggered in everything from expected low all the way through the has to hold. So I didn't get picked up on a whole, group of contracts down here, which it happens. But all the ones that were above the expected low got picked up. So yes, I told everybody that if you didn't get picked up, maybe because you had stuff closer to the has to hold, which is not a bad thing, right? Like trying to play it a little safer, but at the same time not be too aggressive. I told them, like, you can try it at the aggressive level here at 31. So that's what the AGR was. It was just in reference really to the day to say, look, the most conservative approach here is obviously down here at the has to hold. And then this is going to be the most aggressive. So really anywhere in between aggressive and has to hold, you just have to view that as like nominal. And then again, we got the core to lean on for, trying to like figure out a little more of a key point and price for the market to take. So that being said, if this has to hold held, targets to the upside, we're here. Oh, that's what it was. I was going to mention that too. So because we had two has to holds, they were going, I mentioned this in the room, that we were going to have two scenarios that were ultimately going to reveal themselves if, right? Because it's always a big giant game of if we can get back above the 3 a.m. bar. So we finally did get above the 3 a.m. bar. And again, we have this whole scenario played out, target. And here's our, breakout point or decision point to the upside. And again, this breakout decision point here is in relationship to the next scenario that we called out. And I got to tell you, man, I'd have to say that we nailed this one on the day.
Yeah, it was pretty ridiculous.
Yeah, called the absolute bottom and the absolute top.
Yeah, I was going to say, you had a good counter trend off the rubber band if you wanted that for quite a bit of points.
Yeah, it was 20 points or so off the rubber band. Yeah, 98 to, 20 plus points. So, and this holds very true to the other thing that we coach all the time was that if you get to the rubber band, certainly if you go through it, the market has to prove itself out price-wise back below the last two targets. So it's not really any big surprise here that here's target one, and where did the market dip to, right? So again, this is just how we coach and how we teach, and just trying to get people to recognize the series and the patterns that exist inside the market and how to interact with them. So not a whole lot else to say on the ES. Did I miss anything?
No, I think that's good.
Okay. We'll flip over to the NQ. This one, of course, similar. What was different about it is they didn't have but just the one has to hold here on the downside of the NQ. So yeah, like you just kind of work the market sometimes that if it comes to that, like all my contracts in the NQ got picked up because everything, again, has to holds are the utmost extreme end of where they can take it. And then it's a matter of whether or not they're going to break through it. So again, we posted very similarly, like not only is this a has to hold down here, but it's also, I'll blow it up. It's also going to become a decision point, pretty major one, in fact, that if we do go through and like, again, you have to get like multiple candle closes below a decision point to really get it to, start to commit. But naturally, this was just a very quick wick down and up. So this is I'm going to use this one tonight actually in our training session whenever we get together, just to let people know like today was a great example of a lot of different things. One of them would be interacting with the market with limit orders. Like there's no chance you would have been able to react fast enough as these wicks, because again, this is only a 5-minute chart. And this wick, if I count the whole candle, what we got 74 all the way to 56. So, just a mere 80 points in just this one 5-minute candle. So had you not had limit orders sitting down here just waiting at the open, then chances of you getting that price is, slim to none. But then we did list out here, we drew a little box for everybody. And I, again, just sort of pointed it out that like, look, up here at around 59, so 25,059, that would be the most aggressive attempt to still go up. This box here, and if we just sort of drug it off to the side, this box area here, it's more of a nominal entry. And then the best, most conservative. And again, it's kind of how I view it. I know a lot of people might see that as like trying to catch a falling knife. But for me, I'm like, if they're not going to hold this level, then I'd rather get knocked out quickly with a reasonable loss versus I don't know, getting in somewhere in here at the 925 bar, or even worse, the 930 bar, and then having to endure, like, you're not going to endure all that. That's 80 points. So you're going to get stopped out. So anyhow, that's just how I view it. But the nominal entry here, this box we drew, this is perfect. So we wicked down. And so for anybody who, again, maybe didn't have limit orders sitting there, the market was super, super kind. And it gave them a second opportunity to get in right in the middle of the box that we drew. Like, I'd probably say like dead middle nearly. And again, it's the nominal entry. It doesn't just dissipate. The has to hold has to break in order for this to really not be of any consequence anymore. But yeah, so we had the aggressive. Naturally, it didn't even try it. Once it came down once, twice, and then of course here at 940, it was over. They hit again all the targets we had again posted prior to 920. I forget. We had this one posted around. I feel like I had this one posted probably closer to like 9:10 in the morning. And then these again, same thing. We had to wait. So we did not have the upper targets. They didn't get post. Yeah, I don't think they started posting this until after. Oh yeah, here it is. It was right after the 3 a.m. cleared again. So we were waiting. Same thing, timing wise on the ES, and it just coincidentally, I think, worked that way today. But both of them really needed to clear the 3 a.m. That was kind of obvious in order for them to give kind of furthering direction. And it kind of signified here by our little arrow. We had our decision point here, which again, this is just a little oddity in the day. I don't know if you picked up on this one, Bob, but it was just a little oddity in that it was a target, as well as later they were like, oh, we're actually going to turn that target into a decision point as well. Did we get a pullback? You did. So after it broke the decision point, again, same thing. Like if we're tied to this series here, it never closed back below target 1. So again, price is price. But once it did clear it, it just barely here at the 10-10 candle. It kind of missed it by a little bit, didn't it? Couple points. But that was it. This is kind of what we're looking for all the time. We'll tag back to the decision point, and off we go. After that, I was done. Yeah, market was clearly not giving out any additional info, and we took off. The only thing left to the top side on the NQ was up here. There's a pretty significant hurdle they need to get through if they're going to do it, up here at 465. So again, we'll check in tomorrow and see what Globex gives us. See if they get through the 465.
Sounds good. I noticed the YM was hitting all-time highs, so we're lagging a little bit behind that, but not by much. So
yeah, well, in Q, like, where are we in relation to the all-time highs? I think we're down pretty significantly. I think we're down over 1,000 points.
Yeah, I don't call that significant. In the NQ, we went.
Well, I guess that's
we
true.
went 1,000 points from the Friday low. I noticed we.
What was last Friday? I was looking at that this morning, and just the action from Friday was.
Yeah, it got down
to
pretty
unbelievable.
24,235. So yeah, we're up 1,000 points since then. But we're right in the middle of that chop range if you look at the daily chart. So it's anybody's guess. Like you said, let's let the market tell us what it's going to do, and then we'll react.
Yep, we'll deal with it in the morning.
Okay,
but as always, if you guys want, come join us in the room. And we do have, again, just an indicator you can pick up on your own, which is ChartCast. So all of these levels that we produce, again, because it's, through price action analysis, we often wait for the market to tell us what's going on, to try not to guess, and then take the really solid trades from there.
And I did add a link to the free course. So if any of this terminology, if you're seeing it for the first time and you're scratching your head a little bit, we don't charge anything for the course. You're welcome to sign up for it. It's free to sign up for. Go through it, and then If you like what you saw there and you want to join the room, we got a 7-day free trial. There's also a link below for that. So we hope to see you in the room sometime soon.
Yep. Thanks, guys.